Last week, I went to a business networking event and it really got me thinking. Everywhere you turn, AI is the headline. CNBC has had CEO after CEO on their show saying that white collar jobs are about to get cut. Amazon CEO Andy Jassy even admitted AI is already making teams more efficient and that over time it means fewer corporate jobs. And the data is starting to back it up. Between January and July of this year, more than 10,000 job cuts were directly tied to AI. And tech companies alone have announced more than 27,000 job layoffs since 2023, linked directly to automation. Stanford studies show that it's hitting younger workers the hardest. Employment from 22 to 25-year-olds in an AI-exposed industry has dropped as much as 13 to 16%. So yeah, it's real. But here's where I land. AI can do a lot. It can mass produce Slack messages, it can answer your phone calls, it can even give you a clean summary of a 2-hour Zoom meeting. But what it can't replace is the human side of business. It can't replace the relationships that start with a cold call, that turn into a referral, that grow into trust. Whether you're part of a BNI chapter, your local chamber of commerce, or you're just out getting a coffee meeting, AI can never replace the power of networking and the referrals that come from real human connection. And in my world, that's the exact same reason some people need a mortgage banker or an advisor they can trust. So here's this week's financial news to keep you in the loop, brought to you by Joe Does Mortgages. There's no denying, AI is everywhere. Companies are pouring billions into it. Amazon, Microsoft, Google, Meta, Oracle, they're all building massive data centers and spending so much money that it actually boosted GDP by 1/3% last quarter. That's huge. Now, will all this money pay off? Some say yes, pointing out that productivity amongst big companies has already started to rise. But there's also a risk that turns into another 1990s style overbuild where we end up with way more capacity than we need and then the bubble bursts. For me, the lesson is simple. Technology can help, but it's not the end-all be-all. Just like in mortgages, I use tech to make things smoother, but the value I bring comes from the personal side, breaking down the numbers, helping people understand their options, and making sure that their decisions actually fit their future financial needs. On the economy, growth is slow but steady. Forecasts are calling for about 1.7 GDP growth this year. Now, that number may not mean a lot at first glance, but here's how I think about it. 1.7 is basically the economy jogging instead of sprinting. It's not a recession territory, but it's not booming either. I mean, businesses are still producing, people are still spending, but we're not seeing the kind of explosive growth that pushes wages and opportunities higher across the board. In Fed news, everyone's watching September to see if they're going to cut rates. The decision hinges on the job reports we're about to get. If hiring slows, a cut is most likely. But remember, a Fed's cut rate doesn't mean your mortgage rates are automatically going to drop. Mortgage rates move with the bond market, which reacts to market expectations, not just announcements. And we also got another piece to the puzzle last Friday with the PCE report, the Fed's favorite inflation gauge. It shows consumers are still spending, which jumped about 1.5 in July, which means people are still swiping their cards and keeping the economy moving. Meanwhile, inflation stayed about 2.6 year over year, but the stickier core PCE crept up to about 2.9. That's the part that worries the Fed, because it shows prices aren't cooling as fast as they'd like. So when you put it all together, the economy is still jogging along, consumers are still spending, and inflation is being stubborn. And the Fed is caught in the middle. For home buyers, the takeaway is simple. You can't just sit back and hope the Fed will solve affordability for you. Rates are moving on market expectations, not promises, which is why I always tell people, let's focus on your timeline, not just the headlines. And in credit news, there's no secret, credit is getting tighter. Delinquencies are creeping up even amongst folks with stronger credit. VantageScore just reported that 90-day late payments are way up, 109% for subprime borrowers and 48% for prime borrowers. That means that even people who usually never miss a payment are starting to feel the squeeze. But here's the interesting part. While some households are struggling, others are jumping on opportunity. Refinances are actually climbing month over month. More homeowners are applying to refinance their mortgages as rates have eased a little. In fact, applications are running about 70% higher than this time last year. And even over the last month, trends are starting to steadily improve. So we're really seeing two sides of the story. One, borrowers are starting to fall behind, while others are getting ahead by lowering their payments through a refinance. That's why it's so important to have the right guidance, because knowing whether you're in a group that should be cautious or you're in the group that should be taking advantage can make the difference. Housing. Home sales are finally starting to show a little life. Existing home sales were up 2% in July, thanks mostly to a small drop in mortgage rates. Inventory is also climbing. It's up almost 16% from last year. Now, prices aren't falling off a cliff, but growth has definitely cooled. We're seeing the slowest pace since 2023. For buyers, this means more choices. For sellers, it means you just can't list high and wait for offers to roll in anymore. You got to be realistic. And if you're a buyer who's been sitting on the sidelines, this is a window where things might finally start shifting in your favor. One thing out of Congress caught my eye, a bipartisan bill about call centers. Basically, it would push companies to keep their call centers here in the US and even require them to tell you if you're talking to someone overseas or the voice of an AI. Now, whether this bill passes or not, it raises a bigger point. As business owners, we all have overhead to manage, payroll, systems, utilities, all of it. Cutting costs by outsourcing overseas or using AI may make sense on paper, but the real question is, does it make customer service better? Here's my take. I actually have a no voicemail policy in my business. If you call me and I can't pick up, you're not left hanging. You usually get to speak to one of my assistants. And yes, they're overseas, but the difference is they're real people trained by me and they know how to make sure you're taken care of. For my business, it's a game changer. Clients get an immediate response. Agents know they can get the right answers right away, and no one feels like they're stuck talking to a bot. To me, that's the key. It's not about where your team is located. It's about whether they deliver real value and keep the human connection. That's why my systems work. And I think that's why Congress is asking the right questions. Do we want to make customer service cheaper, or do we want to make it even better? Another big topic is cybersecurity. AI is helping companies fight off threats like phishing and deepfakes, but it's also creating new risks. It's what we call shadow AI, where employees use tools that aren't sanctioned by their company that opens the door for hacks and breaches. And here's the scary part. The average cost of a data breach in the US is over $10 million. That's insane. That's why I take data security so seriously in my own business. When clients send me their documents, I make sure that it goes through a secured system, because your financial life is the last thing that should be exposed. To end on something lighter, food. Big brands are starting to roll out all kinds of global flavors, from guacho chili to harissa to guachuchang, even black garlic in some snacks. McDonald's has a new soda line of strawberry watermelon and popping tropic. It's a reminder that while the economy can be uncertain and technology can be overwhelming, at least we can look forward to some better snack options. I'll take that as a small win. So that's the roundup for this week. AI, the economy, credit, housing, Congress, technology, even food. I'll be doing this weekly to make sense of all the noise and connect the dots back to your money and your future. And as always, don't let the fear of the unknown stop you from buying your dream home.